And I think we can potentially quote Winston Churchill when he said around the war against Germany in 1942 at the Alamein battle that this is now not the end, it's not even the beginning of the end, it is perhaps the end of the beginning when it comes to the war against inflation. And I think there are essentially two very important facts to bear in mind. That the number one original sin, so to speak, is that government have spent a huge amount of money to sort of maintain the economy that was put in hibernation to save human lives. So we're talking roughly 10 to 15% of GDP. And the second point, obviously, you had the war in Ukraine, you had the supply chain disruptions, but then you also had this massive build-up in excess savings plus greedflation. So companies' ability to raise prices by more than is warranted, and this is why we see profit margins at record levels over the past 10 years. And now the real issue is that, for me, it's as if companies have developed a natural immunity against interest rates because, number one, they refinance their balance sheets. Number two, we talked about greenflation and this ability to pass prices. And also, consumers are expecting higher prices. And last but not least, the labor market's super tight, and you have lower labor productivity growth, which now is pushing unit labor costs. And then you get this negative, sort of spiral of wage prices. So I think the central banks need to trigger a recession to force unemployment to pick up and create enough demand destruction, but we're not there yet.
Yeah, we're certainly not there yet. And we look at the non-farm payrolls report and we saw the unemployment rate actually didn't go up. It stayed, roughly
Correct.
At lower end. So that is still, a factor for the Fed. What I wanted to pick up on, though, was the lag effect, because we're talking
Yes.
a lot about the lag effect last week. And
Yeah.
we saw more of it, really, as we cast ahead to the CPI. I was astounded to see that on the housing side, and this has been one of the big inputs for CPI, that it takes about a year to catch up on this component, which is a long lag period, but we're almost getting to the point where we'll see some impact on those on the housing component, the shelter component here. The lag effect for you, how dramatic is it this time round, even with fixed rates, taking a while to really catch up with the consumer?
Absolutely. So historically, the lag effect is around 3 to 5 quarters for interest rates to sort of hit the economy. But the problem we have today is this sort of excess saving buildup that is essentially creating a buffer for consumers and households. And then you have this sort of balance sheet repair that occurred in 2021, 2022. So if you take all of that together, it feels like the lag effect is longer than in previous crises, because you see this resilient labor market. And as a result, I think it forces central bank to maintain their credibility and to keep raising interest rates until we get that recession. In our opinion, we think that a recession or slowdown should occur in the US in Q1 of next year, because we think the cumulative tightening is ultimately going to have its effect. It's not disappearing. And then in Europe, we don't see a recession in the euro area because we see demand 2 to 3 percentage points above supply, and therefore we see more of a slowdown, but not recession.
When it comes to a potential recession in the U.S., what do you see driving the recession? Is it going to come from the corporates, or is it more likely to come from the consumer side of the economy?
Yeah, I think it's essentially going to creep into corporate profit margins that are today close to record levels, simply through the wage growth phenomenon that is essentially going to eat into earnings. And the second point is that sort of consumer spending patterns will also slow down. So we think it is a combination of all of these factors that should eventually drive a slowdown. But then again, if you look at the current path of interest rate, it seems like we might see more tightening before this is likely to occur.